So I have two of them. All right, we're going to go ahead and get started. There are several things that I want to discuss today. Philippe, I didn't see your question. Every day through options time decay. Not quite sure what you mean by that. I had directional trades on all those stocks. Anyway, this is the broad market indices folder. Now, if you're an Insider Club member, when you update tomorrow, you're going to get everything up to date. I've gone in and I've updated this folder. And don't make the mistake that Paul Reike made. He drove me crazy this morning because he had indented this. And his groups weren't updating. Just leave it where it is. I understand what he was trying to do, get it to the top of the list. Mine's at the top of the list, but I don't have a bunch of user groups underneath it. So if you have a bunch of user groups and this is stuck somewhere in the middle, you want it closer to the top, but you can't indent it or it will not be updated when I do my updates. Maybe I should rename it, or maybe I could even indent it. That's something I'll experiment with, not sure, and then that will never be a problem. Did I make money today, Philippe? I'm about even today. I was doing pretty well, but I think I gave some back. But the day's not over yet, so we'll see. I don't have a lot of positions on right now. Okay, what I want to point out is I updated these broad market indices. I put the Russell 2000 back in. This is the old Russell. This is Russell rebalancing day, so you're going to see a bunch of volume at the end of the day, volume spikes and so on. But the Russell 2000 bar chart is the provider for HGSI. Russell 2000 now wants $100,000 a year to provide that data to bar chart, and they declined. So Matt is going to either scrape it or try to figure out another way to get that information for the Russell, and he's very good at that. So we'll probably have the Russell included. Now, all of these indexes are created by the software, and there was discussion on the Yahoo bulletin board about the Hindenburgs, and I wish I'd never heard of the Hindenburg, because it's caused so many support problems over the years, and I consider it a very unreliable indicator, but I'll talk about that today also. How many people use the Hindenburg, or I should have put that in a poll question, but I didn't. Do you just type a yes in if you use it? The problem is, as I pointed out on the other board today, that the Hindenburg, and I'll explain the Hindenburg in a minute, it varies according to the indexing method that you use in HGSI if you're using the HGSI index. So it just doesn't work if you're not if you're using some other method of indexing, and I'll get into that as we go along today. First of all, I want to show you something that I figured out this week. Now, in the past, this is going to be kind of a catch-all session, if you don't mind. I think you can learn a lot from it, and I'm just passing on some of the things that I learn, and I always learn something about HGSI as I work with it. Now, HGSI is the platform for the methodology that I'm using now. It's a software platform which allows me to do what I want to do. I couldn't do this in any other platform. As I told you before, I essentially use two programs, HGSI and Thinkorswim. Now, our European friends, unfortunately, cannot have access to Thinkorswim, which is unfortunate. They can download real-time quotes from Google, but if you do more than the S&P 1500, it is a very painful process. I downloaded it yesterday, and I think the S&P 1500 took me, I can't remember, 4 or 5 minutes. But with Thinkorswim, it is running in the background, and you can update it any time. So let me do this. I'm going to get into some HGSI analysis, and then I'm going to go take a look at the Hindenburg, or maybe I should take a look at the Hindenburg first and then come to the HGSI. Let's do that, because I want to get up here to the Major Markets Plus. I'm going to remove my filter, and I'm going to, okay, yeah, we're at Major Markets Plus. And I'm going to bring up the NASDAQ. And then I want to point out what I have added to my quick start views. Now, everything you see here is these four. I'm sorry, let me move these out of the way. I'm going to drag these down in my user folder. Okay, whatever you see here in the charts and in the warehouse views, this is really all you need now to... Can you hear me? Larry Harder says no audio. I hope you can hear me. I know you can hear me because... Okay, this is whatever you need to use my methodology with HGSI. I used to have a lot more stuff. It's still there. It's kind of a repository. You do not need it. This is all you need. But I have added a few more things to make it easier to use primarily, but it's still very functional. For example, the market charts are in here. The stock charts are here. I added these HGSI index charts because we're going to talk about market timing, and I think these charts are extremely valuable when it comes to market timing. Everybody wants to focus on a single indicator like the Hindenburg. I think it's a total waste of time personally, but if that's what people want, it has to be there. But I'm going to show you some other things to look at. Okay, let me clarify why I don't really, I'm not that crazy about the Hindenburg. And by the way, I'm going to open up the market charts. This is what we're going to be talking about. I'm going to be referring to number 2 and number 4. And I just put this in today, the Ian's multiple indicator with the bar chart data, which rarely generates Hindenburgs. But the bar chart data is actually much more stable and reproducible because it comes in the same format all the time. And when we create indexes, or when the indexes are created using the indexing in HGSI, some of these things really vary. And when I look at the criteria, and let's just go ahead and do it right now. By the way, this one is for the NASDAQ, this one is for the NYSE, and this one contains the bar chart data. But when you apply these to any security, if the Hindenburgs are going to show up, they will show up with that security. So let me just bring this up. Now, these rows lines, and most of you know this, but some of you are new and don't know this. These rows lines are supposed to indicate when the market is going to have a major sell-off. Now, there was a question on the Yahoo board today, or comments about why am I not getting the Hindenburg? And it just creates all kinds of support problems if people have different settings. And as you can see, the Hindenburg works some of the time, and other times it doesn't work at all. So this is why I don't like to get too hung up on it. Now the settings, and I'm going to go into, I'm using the number 4 chart right now, Ian's multiple indicator chart. This is a chart Ian put together when he was alive. He put this together 5-6 years ago, maybe more, maybe 10. Anyway, there was a lot of talk about the Hindenburg after the 2008 meltdown. And it worked then. But I don't consider this a meltdown. I mean, yeah, it's a little correction. But it indicated that. But here it didn't do anything. The market just kept going up. So, what do you put your faith in? That's why I think we need to look at other indicators other than just this one. But anyway, let me go into here. Here's the Hindenburg Omen. Somebody came up with this. I can't remember his name. Dennis, you probably remember. And you helped Ian with this chart, I think, didn't you, Dennis? Or somebody did. Maybe Bob Meager did. I put some of the VFBs and stuff in for him. But anyway, these are the very strict criteria which need to be met before any of these rose-colored bars are generated. And you can see that if the daily NYSE new 52-week highs and lows percent both greater than 2.20, and the smaller of these numbers is greater than 79. Now, how precise does that have to be? That's getting pretty picky. And then the NYSE 10-week moving average is rising. I can understand that. The McClellan oscillator is negative, which is advancing issues versus declining issues. And 52-week highs are less than twice the 52-week lows. And here are your selections: HGSI, all NYSE index, or bar chart. So rather than going back and forth, I just put another chart in here. I duplicated it and selected bar chart. And also I noticed that some of these other indicators that Ian came up with and used, some of them were set on NASDAQ, and some were set on NYSE, and I need to go back and double check these, and if they're incorrect, I will re-upload them. But anyway, let's stick with the Hindenburg right now. So somebody posted on the board, Paul did. I'm not getting these Hindenburgs, and the reason they were not coming through is because my indexing, and I don't want this to get complicated because it's not, and you don't really need to know all this stuff, except I did make a change under global index options. I'm still using 104 weeks, 2 years. Starts on Friday of this week, but I went back to equal dollar weighting, and the only reason I did that is so these Hindenburgs would generate. You know, Caroline, I don't even know, to tell you the truth. I'd have to go back and look at it. I don't use this indicator really, but it's just the. Let me go back and see if I can figure it out. If not, we'll talk about it on the Skype board. Okay. Anyway, I don't want to take a bunch of time to do that. Equal dollar weighted index rather than I was using market value weighted indexing. And the reason that I went back was just to generate these Hindenburgs. That's the only reason. Okay, so let's before I leave this, if you put any other symbol in here, let's just put Apple in here, you can see that the Hindenburgs are still going to be here. The symbol doesn't matter because this data is tied to the all NYSE index. Now let me go back and let's take a look at number 5. Here is the bar chart data. Now look, there's not a single Hindenburg in sight. But this would be the more precise data if we use those numbers. So I have to go back to 2014, if I can find it. Right here. There were Hindenburgs here, and these are, darn it, I went too far. Probably using too much. Let's see if I can do this without screwing it up. Okay, right here. And we had a little correction. But, you know, there were no Hindenburgs over here. And we had a little more correction. But, you know, this was a pretty good correction right here using the bar chart data. But everybody is enamored with this indicator because when we go back, I'll go a little further here. Try to keep a steady hand here. Okay, here's what I'm looking for. This is the period of October to November of 07. And then we all know what happened in 08. All of these clusters of Hindenburgs were appearing using the data from the bar chart. And then we had this market swoon here. And then, of course, I wish I could do this a little faster. I just don't want to go too far. But this warning right here is what created the fascination with the Hindenburg. So you can see, we all know what happened during this time period if you were in the market. You know, we had this big market sell-off. So is this a reliable indicator? I don't know. But I did go ahead and change my settings back to equal dollar weighting, but I'm still using 2 years. I'm going to see how that works out. Any questions about this? I don't want to waste any more time on it. Caroline, we can discuss that. You're talking about the smaller of these numbers is greater than 79. The daily NYSE new 52-week highs and lows percent are both greater than 2.20. Okay, so there are new highs and there are new lows, which are both greater than this number. And the smaller of these numbers is greater than 79. I mean, how's that for confusion? So anyway, these, now when you flip back and forth between these, you're going to have for the NASDAQ, but even with the NASDAQ, these Hindenburgs are NYSE data. There's no such thing as a NASDAQ Hindenburg. It used to be 69. Ian suggested changing to 79. Yeah, I mean, that's a problem with these indicators. You're always tweaking them. So, you know, what's right? So let's look at the market from a different perspective, okay? I want to get into the other method of doing this. First of all, I'm going to close all this. I'm going to go in. I'm going to update the intraday now. Okay, high jump is not as confusing as the Hindenburg because there are not those precise numbers. Well, they are precise, but really it's a warning that a stock is extended. It doesn't mean the market's going to necessarily go down. No. It's just a warning that Ian used to say that when stocks meet these certain levels of extension from the moving averages, that there is a good chance that institutional investors are going to take some money off the table. It doesn't mean the market's going to crash. Am I right about that, Dennis and Paul? You've been there with me a long time. Let me show you this while we're talking. Rather than rebuild indexes in a group, I'm going to build all indexes. This takes about 2 minutes. So what I'm doing is I'm giving us current data right now, which has been pulled from Thinkorswim. So we're going to have a look at the market with 40 minutes left in the market day. So we're going to do our weekend analysis with 40 minutes left. Now this is the same data that you're going to get at when you do your nightly download or your weekend download, but we have an advantage here when we're using Thinkorswim because we can do this anytime during the day. Now, normally in the past I showed you that we would just update the industry groups, but what I'm doing is I'm updating all of these indexes right here that you see. If you're using my market analysis user groups, you can do this. If you're new to HGSI and if you don't have all these groups, this will be irrelevant to you. But I think most of you that are on here use these groups. It does take a little longer to update, but it gives you more flexibility. Oh, I see Carolyn sent me a private message. Caroline did, so that's why I answered that question about the high jump. Just, you don't have to send things privately. Just post them on the board so everybody can see. Okay, I'm almost done. 2 minutes seems like a long time, but it really isn't. Okay, it was that quick. Now I'm going to go into the broad market indices, and I'm going to click through, and I'll make this full page, and just pretend that we are doing this at the end of the day. So go up to the Ron Brown Quick Start End of Day, into the top down folder, click on number 1, and sort on raw combo, and you'd always look up here to see what the combo rank is. It's a percentage price change 1 day. If you don't know what that means for you people who are new, you click on this icon, you open this up, and it tells you what the combo rank is. This is not a combo rank because it's a single field, but you just call it a combo rank. A combo rank really, I guess theoretically, has multiple fields. So I've weighted the percentage price change one day at 100%. Yeah, George. I'll do it in a minute. Well, let me do it now while I'm thinking about it. You go under Tools. You don't push a button. You go to Build All Indexes. Okay? Okay, so what comes to the top of the list? The all securities list with equal dollar weighting, since I'm not using market cap weighting, and I may go back to it. Nothing's set in stone with me until I do some experimenting. It's up 2.5% today. I mean, does this seem like a market that's really going down? I mean, there was all this chatter on the Yahoo board about I'm getting out of the market's going to tank. Maybe it is. I don't know. But I'm trying to be a little more objective about it. Now, as we look at the all securities group, it has B accumulation, the short term or the long term, the medium term, and the short term of VPA, which are mathematical directional measures of trends. They're all up and the fan is up. So what does that mean? Let me get to a chart that shows this. I'm going to get out of these. And let's just go into these HGSI charts, and I'll go to this number 4 here because it has the fan. Now, isn't that pretty? All these colors. Here's the fan. So that means if these are stacked, the fan is up. Now, when you see a spike like this, and this is the first I've seen of this, it says the all securities index is up that much. This means that there is a huge gap up in a stock or two. So that's why I really don't analyze the all securities that often. This is impossible. We know the market's not up this much, so there's bad data here in a stock or two. So let's go find something else. Let's go down to the next one, which is the energy index. And this is an index which the fan is in place on it too. It's been pulling back, but these moving averages are still in the correct order. Now, let me zoom in on this. I'm showing you probably too much. This is a chart I put together probably 15 years ago. And my thinking behind it was that if you have a 5-to-1 day in an index, and this is more appropriate probably for the S&P 500 or 1500 or the NASDAQ 100. But it's going, if you have a 5-to-1 day, here is the information that you need. If it's dark green like this, in the energy index, the advances versus declines were 5-to-1 up today, and so was the advancing volume versus the declining volume. But the force 13 is still negative, but the force 2 went positive, and the VPOC, or volume point of control, it also turned positive, so it didn't generate a green like it did here. And this wasn't a very good signal, was it? But it generated a yellow, which is a possibility that there is a trend change coming in this energy index. The rainbow number 4, this one, are you calling this a rainbow, Caroline? HGSI indexes, Ron Brown, end of day. HGSI index charts, I just put these in for market analysis. Number 4. So let me go to a broader broader index. I'm doing this on the fly, so bear with me. Now here's a 50% all stocks institutional index. What does that mean? It means that all of the stocks in here are held by at least, or 50% of the stock is held, at least a minimum of 50% of the stock is held by corporations. So let's look at this one. Now, nothing today on this. You can see that this index is actually down a little bit for today. So the energy, I don't want to lose you on this. I'm sorry if it's confusing you. The energy index, which is up at the top, I'm going to forget about the all securities because I know there's bad data in there. The energy index has a deaccumulation, but because the number is up 2.1%, and this is a legitimate number on this, we are seeing this information up here. The 5-to-1 day on the volume and the advances versus decliners, and the force index turned positive along with the volume point of control. So oil prices were up today. Where does the money flow? It flows into the energy sector. Yes, you have to download it. By the way, I should have mentioned this. I've updated these files, and just go to the add-ons page, go to your main menu. I did that pretty fast. Go to the main menu, add-ons, go down to the bottom, download Ron Brown's basic end of day and intraday filters, and my market analysis user groups, and they are both add-on files. If you want to be up to date with what I'm showing you today, this is what you have to do, okay? Just download them, and then under the main menu, you should all know this by now, select Install Add-ons and install those files one at a time, okay? And then you'll have all these. Let's look at some other things here. I'm going to run through these quickly, and okay, let's go to the, let's use the S&P 500. It's broad enough. Let's back out of here. What do you see? You see this really nice fan here, and then you see the sell-off. What do these colors represent? Does anybody know? These colors represent these trends over here. The best fit long, medium, and short. So if I click on here, and by the way, if you look down here in the corner, you'll see that this is Friday's data. If I click back through to the warehouse, if you look at the last date in this column, 6/22, that's today. This is current data because I rebuilt all of those indexes. Maybe this is more information than you want. I don't know, but I'm going to give it to you anyway in case you want it. So look at this. We all during this period here, if you look at this line right here as I scroll up, the market was up, and then the index was up, and then went into a little pause here, and then it started going up again. Now this one right here, the lighter green, the short-term line went down. That's just based upon 5 days, and then it moved up very strong. And then this is what happened in January, and the market broke down. But did the fan break down? Well, the 50 or the 18 came down through the 50, but the 50 did not come down through the 100 or the 200. And now at this point right here, I don't know if you can see the crosshair or not. By the way, let me ask you a question. On the Skype board couple people, when they watch these videos, seem to indicate they can't follow the mouse. Do you want me to make that yellow circle larger when I produce the video? I will if you want me to. I'm just using... Paul's answering for everybody. I don't want to make it a big yellow circle. I think that's distracting, but I will make it twice the size of what I had it, okay? Anyway, as the trends change, over here now, when it's red, all three of these trends are down. When it's orange, the long-term trend is still up, but the other two are down. So for these charts, I decided to use the colors for the trend. Paula, there's no way to know that. Paula, every trade is a random trade. That's all there is to it. That's why all you can do is put your trade on and manage your risk. Because we don't know what's going to happen with these trades. I wish there were, but like that trade I took today, which I'm behind on now, it was a nice setup, and I'll come back and review that. I was talking about that before everybody got in here, and I'll go back and talk to that. But no, but I'll tell you what, a lot of these, if you can catch, and I'm getting diverted here on this question, but that's all right. If you can catch the efforts to rise and a VPOC crossover at the same time, especially when a stock is in an uptrend, there's a pretty good chance that's going to keep going. And I'll see if I can find something before this is over, okay? Anyway, this up here, on this date, notice the light green. All of the criteria was met, except this was a 3-to-1 day rather than a 5-to-1 day. And what happened? The market did rise, but now it's kind of stalling. But notice we haven't had a big down day on volume and or advances versus decliners. So consequently, there is no signal here. So I don't see that this market is breaking down yet. Now let me run through these other ones quickly. I'm spending way too much time on this. Okay, I'm going to start with number one. What is number one? This is accumulation distribution based upon the lines. If you look over here to the left, this is A and E accumulation. A is green. You can see that the green A is coming down though towards the red. Oftentimes when it crosses over, but not always. Let's see. Well, here's an obvious one. Green down through the red, big market sell-off. And this actually happened just as this was starting to go. So this is A's versus E's. This next window is A plus B accumulation and distribution D and E combined. And you can see when you combine both of them, this is still a long way apart. Now here, right here is where the A and B crossed over the D and E. And, you know, we've had a pretty decent run off of this. Yeah, anybody who's not a member of the Skype group should be a member if you're an HGSI user. If you're not, you can't join. But we talk VPA all day long and suggest trades and so on. Not that you should take them, but it's just what we're looking at. If I take a trade, I'll put it up there. And not always, but generally. Anyway, let me get back to this. So this is accumulation. This next one breaks the accumulation out into individual lines. So as this A is coming down towards the E, here's the A coming down, it's flowing into the B. And the C is yellow, that's kind of neutral. The E's are coming up now, and kind of flowing into the Ds. I don't know how useful this is, but it's there. Now this is a good view. This is the percent of the stocks within any index, any HGSI index, and it has to be an HGS index. It shows the percentage above their 20-day moving average, their 30-day moving average, their 50, and their 200. Now on the S&P 500, notice that a lot of these stocks, the percentage, they're not even above their 200-day moving average. So let's compare this to the, I'm looking for the NASDAQ. Why can't I see it? Because I want it. NASDAQ 100. Well, surprisingly, I thought this would be above. So there are some NASDAQ stocks that, no, I'm sorry. I'm reading this wrong. I'm looking at the moving averages rather than the percentage above. Forget what I said. What you do is, I didn't sleep well last night and it's showing now. Let me clarify this. Here's the percent above the 20-day moving average within the NASDAQ 100. 55%. Above, this is the moving average here, so you can see it dip down below the moving average. Here's the percent above the 30, the percent above the 50, and the percent above the 200. There's almost 67% above the 200, but it's still below the moving average. Now in a real strong market, like back here, you generally see this percentage above the 200-day period moving average line. It shot up above the 20, 30, 50, and 200 here, but since that point, it really hasn't. So, it's not real strong. Let me put the crosshair on. When you see the percentages, especially in these top three that move above their moving averages, and look where this happened if you look down here. Remember, I'm in the NASDAQ 100. As this market started to go up, and look at these VPA flags right here, this one went above its moving average. This one was always, the 30 was already above its moving average, and the percent of the above the 20 went above its moving average. So you can see that these stocks moved up. So this is often a good signal to look at. Now look what we have here in recent days in the NASDAQ 100. Where has the weakness been recently? It's been in the tech stocks, hasn't it? I mean, some of the tech stocks, it's a very narrow market. The FANG stocks have been doing really well. All the money is rushing in to a few stocks, or at least that's my observation. And we are seeing some of the stocks starting to fall the percent above their 20-day moving average and 30-day moving average especially. The 50 has turned down too, and the 200 is already negative. Now let's compare. Let me go back up to the S&P 500. Well, we're getting the same thing here. So we are getting some deterioration. But see this volume number down here? This volume bar? This was calculated just a little while ago. We don't have closing volume. And the Russell's going to screw up the closing volume today anyway. The Russell rebalancing. But this, the market's been selling off on lighter volume. What does that tell us from the VPA perspective? It tells us that there's not a whole bunch of selling pressure right now, or at least that's the way I'm looking at it. I mean, if these volume bars were really spiking up and this is happening, then I would be a lot more concerned. Okay, any questions about that chart? Just play with these. Here's the chart that I already looked at. Volume numbers are the same, of course. Now here is one with an internal data window. This is from when did I update? 15 minutes ago, the percent of advancing stocks in this index, the S&P 500, was 2/3, and the decliners was 1/3. You can see that right here. Here's the number: advancers minus decliners 167. Advancers divided by decliners 2-to-1. Right here, you can see it. Advancing volume divided by declining volume, 1.68 positive. The ARMS index, 1.19. Theoretically, that should be below the 1, but these other things. Now, today in this index, what do we have? The percentage of 52-week highs, 3.98%. The percentage of 52-week lows, 0.40. What does that say? It says that this index is still pretty strong to me anyway. Highs minus lows, 18. Highs divided by the lows, 10. You can see that right there. And here's the percent above the 20, the 30, the 50, and the 200 from that chart that I just showed you. This is called a warehouse field. We can put any warehouse field in this view, and you get a lot of information. Okay, here's the percent of stocks in this group that have A accumulation, about 11%. The bulk of the stocks have B accumulation. I'm not going to read all these numbers. Here's the overall accumulation rank. The AD direction, which is a short-term indicator for accumulation, is down. Bongo weekly is still positive. Bongo daily is down. Both force indexes are negative. And the days since the force index crossover, days down 2 days ago. That's correct. Days since the last VPA signal. Look at this VPA flag right here. Not too bad, huh? I mean, it hasn't fallen much, but VPA, here's the VPA trends, and here's the last date, which was today. Yeah, you're going to have to just review the recording, Caroline. That's why I do the recordings. And I know I'm jumping all over the place today. Okay, let's look at this. Now, here's the percent above the 20 and the percent above the 50. I just stuck those in there to get another view of that. Now, this one is a cumulative new high versus new low line. So the cyan or blue line, whatever you want to call it, is above the moving average and it's going up. So this means that there's more new highs than new lows. We saw that up here on a one-day basis. So that, to me, doesn't look like the market's breaking down yet. Now here is accumulation distribution. The formula, I don't have the formula, but the accumulation numbers are kind of based on these parameters for HGSI. You look up here at the top line, this is A accumulation. It dropped to B and then to C and then it went back to B. It's still at B accumulation. And the reason, even though this has come down, that the accumulation numbers haven't gone back to C is, I assume, because the volume is light, because volume is factored into this. And then the last one in here, this is the HGSI advanced decline with the 30-period simple moving average. This is a cumulative advanced decline line for the S&P 500. So now, does that look like this market's breaking down yet? I don't think it does. So I don't care how many Hindenburgs we're seeing right now. I am not going to base my market analysis on the Hindenburg alone. I'll consider it a little bit, but I think it makes much more sense to come in, and let's go back to this and look at these indexes. Now I'm going to go from my number one view, and I'm in Ron Brown Quick Start End of Day, and I'm going to go down to, I want number 4. Sorry. Number 4, it tells me, it gives me a breakdown of the advancers versus decliners today. And you can see that the energy index is clearly the dominant group today, other than the utilities, but that is an index of 15 stocks. We're talking about an energy index of 200 and, well, about 300 almost. Okay, so I'm going to kind of move away from this. Any questions? I don't remember what the Granville line was, Tom. Refresh my memory. Anyway, I'm going to take a look here. Let's just look down here. You can see the Dow rebounded today after, 8 days down, something like that. The materials index is rebounding. Here's the utilities. Here's the S&P 100 consumer staples. Oh, the OBV line. The OBV line, all data was either, if it was an up day, I believe all the accumulation was added to the upside. If it was a down day, all accumulation or distribution was to the downside. I used to believe in the OBV line. I don't believe in many indicators anymore. But in fact, I don't even look at it. But yeah, I mean, I looked at all that stuff over the years. I don't hear much talk about it anymore. Let's VPA. That's right. Okay, so let's look at the energy index. If you're doing this intraday, I'm going to change to this index group, and I'm in my end of day views here, so I have to make a change. So I'm going to go down to my quick start intraday since we're in the intraday mode, and let's just look at scorecard intraday. And I'm sorted on the raw combo. This is a combo that I call effort versus result, which is terminology from VPA or Wyckoff. What's the effort? The effort is, well, let me bring up a chart. Let me show you the combo first in case you haven't seen this. It is a combo that I've experimented with, and I find that this is the best combination. I weight the intraday volume divided by the 50-day moving average volume at 33 1/3%, the intraday change at 33 1/3%, and the intraday range at 33 1/3%. So let's see what that does. Here's the intraday one-day change. Here's the intraday range, trading nearly at the top of its range. Here's the volume, trading 84.3% above its 50-day moving average volume. So this drives these stocks to the top of the list. And this shows me over here which industry groups they're in. Now, if I take this down to the next level, this refining and marketing, I am in the energy sector, but I can isolate this to refining and marketing to see if any of these other refiners are moving up like this. Yeah, there's some nice gains, but this is the biggest percentage. And look, it came to the top of the list, and it was at the top of the list in the refiners and marketing. Now let's look at the chart, and let's go to a different chart here. I'm going to get out of these HGSI index charts, and I'm going to go to, let's just go to a basic fan chart for now. So here is a fan that is just beginning to form. Why do I say that? Because the 100 just went up through the 200. The 50 is already above both of them, and the 18 is above that. So as the group came down, this stock pulled back. Look at these great VPA flags right here. Paula, here's an effort to rise after these two. This is a good combination here, by the way, and I'll show you where the screen is that'll pick up charts. Yeah, this is Klein, CLNE. This is a stock I was in, and I made money, and I got out of it. I got stopped out of it. Well, I should be back in today, shouldn't I? Sometimes I just pull the trigger too soon. Anyway, here's the heavy volume, which you saw was represented in that warehouse view because it was near the top of the list. Here is the candle, which is, let me make this bigger here, candle which here is near the top of its range, and the percentage price gain. Let me go to a different chart here. Let's go to this position sizing chart. This is what I use to set up my spreadsheet. So the percentage one-day change is almost 9%. Yeah, I should have jumped back in this morning. Didn't even notice. Notice that we even have a pocket pivot, and here's the volume point of control right here at the same point. This is where I got in before, right here, right in this area, because I saw these two VPA flags, and it shot up and then it reversed. This bothered me. The group was coming down, and I moved my stop up, and unfortunately I moved it up too far, but that's the way it goes. I may get back into this Monday if oil continues higher. It's just, it's a little stock, not a whole bunch of risk, and I'm ahead on it anyway, so I can afford to try it again. But this combination here, Paula, if you click on this, strength seen returning after a downtrend. Here's your little downtrend. And then this is a confirmation. An up bar closing near its high confirms the return of strength. This is a good combination. And then if you see a chart like this with an effort to rise, and hopefully you'll get in on this before. I'll show you where the screen is for this. You can catch some stocks. They don't all work out. The stock I got in today had the very same signal, and the last I looked, I was behind on it. So it doesn't always work out. But let me see what. Okay, let's go back to this. So, okay, so that just happened to be now here. American superconductor, renewable. This is in the energy sector. But let's go down. Let's look at the group. There are several stocks in this group. In phase energy, Piers. I don't think Piers is on. He was in this. I think he's still in it. This group is doing okay. Several of the stocks are up on a not so great day. I'm Paul. I'm back into run again. I don't know if you are or not. I've been in this the third time I've been in it, but it really hasn't done much today. Let me bring it up though. Why did I get into run? I guess this is the best way to teach, to give examples. Here is the fan. What is the fan? I guess I should explain the fan a little more. A fan is a sign that I shouldn't, well, it's one of the signs that there is institutional interest in a stock, especially if a stock starts climbing this 18-period exponential moving average, and it pulls back to that 18 and doesn't go below it. See how it hugs the 18, then it shot up, and as it pulled back, it didn't challenge the 18 again. Look, this group was going down. This stock was going up. This is where I bought it before. It was going up. It was holding its relative strength. Well, everything in the group was going down. So what does that tell us? It tells us that this stock has greater relative strength than its industry group. And that's why I got into it. And then I recently got into it because it was forming this flag. Well, it's a loose flag now, but it's more of a plateau. It's more of a congestion area. And then there were two of these tests, a low volume test, and you can clearly see this. This one right here is represented by this volume bar. This volume bar represents this one, and look where they closed. They closed in the upper part of their trading range. That is a low volume, or these are low volume tests for supply VPA flags. Today it's just bounced around, hasn't done much the past 3 days. What am I hoping for? I'm hoping this group line continues up, and I'm hoping for volume to come into this stock. You can see how poor it is today, and it'll break out of this trading range. So you just need to really start looking at these stocks closely. Use the VPA, use the volume point of control, use the volume point of control charts. And by the way, I haven't talked about this yet. The people on the Skype board know this, but I added, here's the volume point of control chart with all three levels of volume point of control. So the volume point of control 10 is the brown line. This is the 22 period, which is 1 month. And then this is the 2 month. So you can look down here. See how this held here? And now it's holding here. There's a lot of control here. Now if you want to flip through these quickly and see the buckets, you just, I put these charts in for you. For us, I should say. I put them in for myself, but I'm sharing them with you. Okay, so there is the volume point of control. The longest bar on the 10 represents the volume point of control. You can see that. That means most of the volume activity over the 10 periods has taken place in this area. Pretty obvious. On the 22 period, most of the volume activity has taken place in this area because there are some big volume bars back here. And as this was going up, all that volume is assigned to these buckets. So this is where the control is right now. And then this is a 2 month control back here. As I move this out of the way, this extends clear out here because it's down here because there was a lot of volume in this area, and this line extends clear out here. It may be a little bit confusing to you, but I just look for these lines. I use the 10 period volume point of control as a trigger. I did not take this stock off when it turned rose because I look at this and it says, it looks to, well, first of all, it didn't hit my stop. And second of all, Paul, you're still in good. Second of all, the volume is light. It's extremely light. There's not a lot of selling pressure here. And where's the volume point of control? It's right here. Okay? Isn't this fun when you start looking at these charts this way? Okay, now I got messed up here. So the market is closed. Let's do this. I'm going to take 2 minutes. George, this is how you do it. I close everything because it calculates much faster when the warehouse is closed. And then I go under Tools, and I'm going to build all the indexes. And we're going to take a look at these indexes in the last 10 minutes or so here and see how the market closed. I doubt if it's changed much from where it was before. Where'd that go? There it is. Okay, any questions while we're talking about this? Paula, I can't show you that screen until this finishes, but I will. I wish I could run two HGSIs at the same time on the same computer. Okay, just for fun, and I don't know how well this is going to work. Let me see if I can find my page here. I don't want to screw anything up. I don't know if I can do this or not. I had some polls I wanted to take, but I don't want to screw up the webinar. So let's see if I can find this. I'm doing this in the other window. And I've got so many things open, I'm having trouble locating it, but there, I think I can find it now. But how do I run it is the question. I may not be able to do this because I can't remember how to run the poll. So, oh, here we go. I'm going to move this over, and I want you to answer this question. Are we going to get 100% on this? I would hope we would, but actually I don't, because I want some new paper. People, not paper. %71% have voted so far. I'm still getting used to this program. So 39 people showed up out of 70. Friday afternoon. There's better things to do. I'm going to end that polling. Let's do another poll. Well, I'm going to share the results there. And let's see if I can find the next poll. If I can't, I'm going to move on. Okay, I'm going to launch the poll here. I want to know how much interest there is in ETFs. I haven't really spent any time on ETFs. The principles are really the same, except there's so many ETFs, it's kind of overwhelming. Okay, anybody else going to vote? If not, I'll shut it down. Well, so just a small percentage of you do ETFs, but this software can handle ETFs just as easily. I'll probably start spending some time on that in the future. Okay, let's end that polling. I'm going to share the results. Let's see, I think I had one more. Okay, I want to know how many of you are actually using VPA and volume at price, or volume point of control. Well, there's a few that don't. All right. Most of you do. That's good. It would be interesting to see a sample if all 75 or 80 people had shown up. But anyway, I'm going to get rid of that. And let's go take a look at the broad market indices at the close. And then Paula, I'm going to show you where to find that screen. And I want to get out of scorecard intraday. I'm going to go back to my top down. And forget the all securities index. We know what happened here. Nothing really materially changed. There are no mutual funds in HGSI. That was a huge expense. Used to have mutual funds many years ago, but they wanted a huge amount of money to maintain them, and it just wasn't worth it. You can see where the weakness was. Let's just look down this list. And this is not all that weak. Technology and the SOX, but the SOX is 30 stocks. So let's take a quick look at the technology index. Energy, materials, this is pretty much what we saw before. Here's your industrials. Let's take a quick look at this. And I'm going to go back under my market charts. Whoops. Darn it. And let's just look at, let's go to number 4 here. And you can see how strong the technology sector had been, but now we're starting to see some deterioration in it. This was yesterday. I didn't get one today. This was a 3-to-1 down day on the decliners over the advancers, and this was a 3-to-1 down day on declining volume versus advancing volume. Both force indexes have gone negative, and the VPOC turned negative. There was some pretty heavy volume today. You can see that this is a negative pocket pivot. So technology, which has really been the leader recently, is showing some weakness now. So just be aware of that. I mean, for so long, we have been infatuated with the tech stocks. And at some point, these tech stocks, I need to get that. You can just click the button on that polling if it's still in your way. The tech stocks are rolling over a little bit. So just be aware of that. It doesn't mean that they're going to tank. Look at the fan. The fan is still in place. Now let me flip back to this, and here is something, some of you may not know this, you can tile the ranking and the warehouse horizontally. So the ranking module is on top now, and I'm going to change this. I'm going to change it to the percent change 4 weeks. And let's scroll down to the tech index. I'm going to click through to the ranking module, and you can see that over 4 weeks, this technology index was up nearly 4%, 3.75%. Now, if I change this back, this is a very versatile and useful tool, by the way. You can see that it was down 2.2% this week. So over 4 weeks, it's been strong. Now, if I go in here, I'm going to go to Ian's slow. This was Ian's formula, which was comparable to IBD's ranking method, and this ranking module is far superior to what IBD offers because it's flexible. You can see that this is, let me explain what this Ian slow is. It's based upon 6 months, and the last 3 months are 70% of the ranking. So from, I'm going to go a little over, I hope you don't mind. Okay, so here's 1 month, 2 months, 3 months approximately. So this is 70% of the weighting right here. And the prior 3 months, that's 30%. So as you can see, it's jumped all over the place. But over the past, 2 months or month and a half, the technology index has really been good, or it had been good, and it's rolling over now. So let's go back to the ranking module, and you can see how choppy it's been because it's been bouncing from red to green. So on this week right here, on 5/11, it was ranked at 93, and that would have been looking back 6 months from that date. Now look how quickly, from week to week, this dropped. It was 96, or last week it was at the number 2 on the list, and this week it's number 28. So it has dropped considerably just in 1 week in the ranking module. Oh, I'm sorry. I thought I was still on Ian slow. I screwed that up. Let me do that again. I thought something was wrong as it was bouncing back and forth. Forget what I just said about that. This is Ian slow. All I told you about the 6 months, that's all correct information. And this is a way to look at short-term versus long-term strength. So you can see that it was, technology's really been strong, healthcare's really been strong. The past 3 months, the Russell's been strong, small caps have been strong. And when I look down here and sort on the raw combo, the percentage price change 1 day, you can see that it dropped to number 29. When I sort on percentage price change 5 day, which would be every day this week, Monday through Friday, it's down 2%. But over the long term, if I click right here, it still remains very strong. So, are you going to bail out on technology? Not necessarily, but don't protect yourself. You know, just don't write it down if you got a bunch of tech stocks. But you can see that this is a valuable way to look at this. I'm sorry I screwed that weekly stuff up. Let's go back to it though. And it just shows you, I clicked the wrong button here. It just shows you how choppy it's been from week to week on a 1 week basis. Okay, any questions about that? Now let's go back, and I'm going to show you a few VPA screens, and then I'm running over as I always do. I hope you don't mind if I do run over. It's not, these screens are in the basic end of day scans or the basic intraday scans. I moved them in here. I didn't want to bring them in to the quick start because I didn't want to confuse people right away. So anyway, let's do both sets are identical in the intraday and end of day. And let's just go in here and look at number 4. And I'm sorting on raw combo. And these stocks should have those VPA flags, Paula. Number 4, go into my basic intraday or basic end of day scans. Click on number 4. Let's bring this one up and let me get a decent chart which is more relevant. Okay, alternate 1. Now this is a stock that's obviously in a downtrend, and it's a biotech. It's underperforming as a group. How do I know? I look up here, and the group's going up. This one's going down. But there is some interest in this stock, and this is probably a Russell rebalancing spike. I don't know that for sure. But this right here, when I click on that strength seen returning after a downtrend, and this is a confirmation of that strength, and here's what happened today on either, I don't know if this is Russell, probably not yet, or just volume, and you can see that it shot up, what, 21.61%, closed at 98.07% of its daily range, and the percent closed to the volume was 1,000% above normal. Okay? Let's look at the next one. Let's look at GMS, Home Product Store. More of the same, very similar, but not exactly the same signals. And the reason for that is when I put these filters together, you have to use the word the last VPA signals contains an up bar closing near. So it does not look for the specific signal. It looks for a condition that contains these words. So that way you may get a different look, but it's the same theory. So this is no supply. This is a low volume test. This is a confirmation of that test. And here is an effort to rise. So if you use this screen and then you look, if you have Thinkorswim, if you can follow this during the day, or even if you don't, if you have to use Google, you can use this screen and hit the F5 key and it will only update this screen intraday. It will not have to go through the whole database if you have to use Google. If you have Thinkorswim, it's no big deal. You can just update manually or you can let it run in the background. For those of you, anybody on here have trouble with HGSI crashing when Thinkorswim's running in the background? It's a Thinkorswim problem. It's not an HGSI problem, if you do. I have tested this on 5 computers, and I've never been able to get it to crash. So, I see support questions coming through that it crashes, but I see that evidently nobody here is having a problem, which is very good. Okay, anyway, let's look at another one. I'm trying to find something that I recognize here. Anybody recognize any of these signals that are green? But you can see that a lot of times these signals fail too. Here it failed. But look at the group. You know, the group's an important factor. Here's a trucking stock. I was in this stock a while back. Didn't really do anything, but here's a couple of those signals, and then here's a reversal signal. The problem is, once again, the group is going down. Let's go back up here to some that were positive for the day. How about, this is a trust. Okay, here's a really nice one. Now, I'm looking at this chart, and what I'm seeing is that this stock just got above its 200-day exponential moving average. It is trading above the other three exponential moving averages. The 50 just went through the 100, but for a true fan to form. Okay, Tom, thanks for attending. There will be hopefully another one next week if people are interested. And this fan will be complete when these two moving averages cross up through that 200. But look how far it's moved off the bottom. This is actually a very tight chart. Another thing I want to point out here, stocks do not go up unless the VPOC turns positive. Volume point of control. Look at that, right at the bottom with these VPOC flags. Little pullback here, no supply, came back to a moving average, took off, and it's really been going sideways since. Okay, so anyway, go through these screens. This is a test for supply. This one right here, effort to rise. If they're not too far gone, what your entire goal or process should be to look at stocks where you can get a relatively low risk entry. So that number 4 is good. A lot of times these stocks are already gone, but here's a couple signals right here. That's a $1.72 stock. So let me find something better. Okay, VPOC turned positive. They don't go anywhere unless this turns positive. Volume coming into the stock. Here's an effort to rise. Follows through. You know, when they get this far away, sometimes it becomes more dangerous the further away they are from the congestion area. Okay? But what you can do with this one is you want to look, this is the percent close to the volume point of control. This is the days since the volume point of control crossover. If it's a 0, if it's blank, it means it hasn't crossed over yet. If it's 0, it means it crossed over yesterday. Because this data I'm looking at is from yesterday, which is actually good, because in the morning you want to look at these. Well, you know, here's what happens when you chase these, though. It can happen that way. Now here's another one. It happened yesterday, because this is today, this is yesterday. Here is an effort to rise, little cheap stock again. Got some resistance over here though. Here's big lots, effort to rise, pulled back today, group pulled back today. In a downtrend, the fan tells you immediately if it's an uptrend or a downtrend. Here's a group that's been moving, specialty apparel stores. Group turned down today, but it's been moving. Here's the effort to rise yesterday. What to do? It ran into resistance too. Anyway, you can look for them with the effort to rise with recent crossovers, is what I'm saying. Okay, I think that's all I can go now, and that's unless there's any questions. I've gone for an hour and a half. I wasn't planning on going this long. URL to that. No, I'm sorry. No, that shouldn't go to Larry Harder. Okay, did you find the shortcut keys? This is to the add-on. Okay, thanks, George. Yeah, I'm trying to fill in some holes here, but I just don't see the market breaking yet. So pay, you know, you can take the Hindenburg into consideration, but you have to look at a lot of other stuff too. All right, well, thanks everybody. I'll have this video. You won't have it till tomorrow.